A very good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kapasi. Let's tell you what the markets are up to as we speak. Well, that buzz that we saw, the momentum that we saw in the markets in the last two trading sessions has certainly tapered off as now we are in the red. Well, mostly flattish actually. Can't really say that this is a market that's losing. 11,200 is where we are at for the Nifty, and the Sensex losing 92 points. Seems like it's losing with a little more fervor. Interestingly, metals are today outperforming with a gain of close to 1%, though that as well has tapered off. IT yet again the bellwether, really doing pretty well today in trade, but we have telecom, infra and banking yet again that are the key victims. So let's tell you the big movers and shakers in our market Fatafat segment. I want to flag off what's happening with some of these insurance names, and interestingly most of these as well have seen quite a bit of volatility on an intraday basis. But largely, we have quite an optimistic note released by JP Morgan, where they are categorically saying that they do prefer life insurance over non-life insurance players because they see potential for 15 to 20% VNB growth. In fact, ICICI Prudential is their top pick as they identify the valuations are just 2.2x the FY21 PEV. SBI Life is 2.6x, but HDFC Life, even though it's leading the APE recovery, is actually one of the most expensive at 4.7x. Okay, moving on, steel stocks, and like I flagged off, metals today is really showing a bout of recovery. Tata Steel as well is among the top Nifty gainers there, and I think Tata Group in general is seeing a lot of momentum, perhaps on account of the group being in talks with various investors. I think some reports were also mentioning the name of Walmart when it comes to essentially buying the stake that the Mystery family owned. But nevertheless, we also have a CLSA note which is upgrading Tata Steel to an outperform, and they are keeping their target price at 405 rupees per share. Moving on, take a look at Mindtree, which is seeing some momentum today in trade again from the IT pack. So no surprises really. It's not just the large cap IT names, but even these mid cap IT names that have been seeing a lot of momentum. Even on the FNO side, the open interest is up 12%, indicating that there is fresh longs being witnessed in the counter. Another stock in focus is IIFL Finance. The news around this one is the company has, it's not such good news, frankly, because we do have Moody's that has raised circumspection on the company's asset quality concerns, and hence they've downgraded IIFL Finance corporate rating by a notch to B2 from B1. So some downward momentum in an IIFL Finance. And finally, small cap companies, Steel Strip Wheels. The reason why we are flagging this one off is because it won a couple of export orders worth roughly around 200,000 euros. And this is something that did boost the counter. 9,000 wheels for an EU trailer market. So we are seeing some momentum come by in the stock price. But again, this one too has tapered off quite a bit in trade today. Okay, well, moving on from the movers and shakers on the Lal Street to the ones that are eyeing the Lal Street now, that's the IPO market. The last 1 month have seen companies making a beeline to list themselves on the bourses. So 3 issues are open for subscription. UTI AMC, this is going to in fact be the third AMC or mutual fund house that's going to list. It's also Mascot Dock and small name Likita Infrastructure that are the other issues up for grabs. Well, listen in to the future prospects of all these companies from the management themselves to understand which one interests you. Take a look.
As in the company and all mutual fund put together, we did a very, very good job. There's not a single investor who didn't get the money on for the redemption. We manage our liquidity very well. We have reviewed our risk management processes. And I'm sure going forward, our industry will continue to have faith and trust of investors in the fixed income space. So far as the equity is concerned, over the 5 years period, our equity grew from almost 5.5 lakh crore to almost 13 lakh crore. And indeed, last 2 months, because of the pandemic, we have seen the challenges. But if you see the outflow, it is very, very insignificant. We have seen the outflow of 4,000 crore each for the last 2 months on average. It is only 0.5% of our AUM. That indicates that still investor has a lot of confidence in our investment processes as a body, as an industry.
The offer details essentially comprises of sale of about 3.02 crores of share in the ratio of 50% for QIB, 35% for retail investor, and 15% for non-institutional institutions. The whole thing converts into a 15% of this investment. The entire IPO is open for subscription from 29th of September to 1st of October, and the price band has been would be announced in this particular segment, and the price band essentially ranges from 135 rupees to 145 rupees per share of face value rupees 10 and a bid lot size of 103 shares. Reservation for employee is 0.1%, which translates into 3,45,517 shares. There are no discounts for retail investors and employees. And as you're aware, Majgaon Dock Shipbuilders Limited is India's only shipyard that builds destroyers, frigates, and two different kinds of conventional submarines for the Indian Navy.
Okay, well, there you have it. That's, of course, lining up all those IPOs that, are, of course, open for subscription. Well, another event that we'll be watching out for, Donald Trump and Joe Biden sharing the stage in a live debate in Cleveland, Ohio, the first of the three head-to-head matchups before the November presidential election. Trump, of course, has questioned Biden's fitness for office, even calling for the 77-year-old former VP to take a drug test. At the same time, the U.S. president will, of course, be vulnerable to attacks on his record in the White House and before he took office. A New York Times report at the weekend revealed the president paid just $750 of federal income tax post becoming president in 2016 and 17. But how do U.S. markets, Indian markets respond to elections in the United States? Let's go across to my colleague Jayesh Khilnani with the numbers.
Did you know that the previous first presidential debate in 2016 was the most watched in American history? More than 84 million viewers had tuned in to that debate, and that is exactly what's going to happen tonight. The first presidential debate will happen of 2020, and it will be an exciting one, I can say. However, let me just bring out some facts that you should know. There have been 15 elections that have transpired since 1960, and the Democrats versus the Republicans, they have been head to head with each other, with 7 elections being won by the Democrat candidate, while 8 of them have been won by the Republican candidate. However, during such events, the market watches very closely in order to get any cues for the future, and that's why we are tracking how the S&P 500 moves on the next day of the presidential debate, along with the 5 days ahead of the presidential debate as well. In the last 10 to 12 times that we've had this debate, what is interesting to note is that though on an average basis on the next day the S&P 500 has declined about 0.3%, while the next 5 days it has managed to decline about 1% on an average basis. However, it has been more positive than it has been negative instances. So you have 64% of the times that the S&P 500 has managed to advance on the next day, while there have been 46% instances where the S&P has advanced over the next 5 days as well. And of course, it's very important to point out that this data can be a little skewed because of the market reaction in 2008 due to some of the other factors as well, owing to the global financial crisis as well. But if anecdotal evidence is to go by, then the market definitely goes long into the presidential debate.
Okay, Okay, well, we'll be watching out for this one. It's going to be held tonight in the United States, telecasted in India at 6:30 a.m. tomorrow as per Indian Standard Time. For now, quick break on the show. Do come right back. Okay, welcome back. You're watching the newsroom on ET Now. We told you Google was planning this 6 days ago, and now it's official. Google has announced that the Play Store billing in India, Play Store payment billing in India, effective from January 21. This basically means that all of you on Android will have to use Google's billing system for any app or in-app purchases for subscription. So be it for news, music, fitness, even gamers now will have to use the Google billing to buy extra lives. Let's go across to Nayantara Rai for more details.
The ET Now news break has been confirmed just the way we told you 6 days back. Google has launched the Google Play billing in India. What does this mean? Well, it means that all users of Android will have to make purchases on their apps, in-app purchases, only with Google's billing system. This is for any virtual item, any virtual service, which basically means all of you that have subscriptions, whether it's for education, fitness, dating, music, news, you will have to use the Google billing system. It will, however, not cover physical goods. So, if you want to order food, you want to pay for some real estate or your rental, things like that, you will not have to use. It's not mandatory. It will certainly cover gaming in the sense, and the blog put out by Google expands on that quite a bit, whether it's for extra playtime, avatars, characters, you will have to use a Google Play billing. Real money games is anyway not permitted. Now, what is going to be the impact of all of this? Look at the timing. It's happening quite soon after that entire debacle with Paytm, when the Google Play Store had taken down Paytm for a couple of hours alleging gambling policies. It's coming soon after that, the Play billing system in India. So it's Google that will determine the interface, the mechanism, and the options that users can use to be on Android and make purchases on their apps. It's going to be up to Google. So we have to wait and see if the Google Play billing is going to be integrated with its competitors, whether it's Paytm, whether it's PhonePe, whether it's MobiKwik. It is being seen, of course, as a massive advantage for Google Pay. So all I can say is it's heating up. Watch this space. Globally, you have seen the likes of Spotify, Tinder, Fortnite games owner Epic come together with another 10 apps to take on Google as well as Apple for the way they treat apps and to seek friendlier policies. So clearly, this is going to be a very interesting space in India too.
Well, it's not just the timing about Paytm, but the fact that, most of us consume a lot via apps, be it the news, be it music, and more so during this pandemic. So definitely important and very relevant. Thank you, Nayantara, for that. And in our Get Rich segment, we had none other than commodities guru Jim Rogers share his mantra. He remains cautious about investing in the unknown, says it's better to gain 1% than to lose 3 to 4% in a year, and advises investors only invest in things they know much more about.
I have the same problem. Everybody in the world has this problem now. It's a time that has never existed in world history, when major interest rates have been zero or even negative. So it's very difficult for everybody. But my answer is, don't get too confident. Don't try to reach for something, because it is better to earn 1% a year than to lose 3 or 4% a year. And if you start investing in things you do not know about, you're going to lose money and you're going to suffer. I don't like it either. None of my friends like it. But be very careful, because when it ends, and it will end someday, many people are going to suffer badly.
Okay, well, that's, of course, Jim Rogers speaking to ET Now. Yeah, better to invest in the known than in the unknown. This is not the time to be adventurous. That's, the key message coming in. We'll wrap it up on the newsroom. Many thanks for watching.